What's up, millennials? So today we're going to take a look at the more bearish arguments for View because the company is still relatively close to that net asset value of $10 per share. Now, before you start disliking the video, I can understand that, but keep in mind I've been making multiple bullish videos about this company as well. I think that it's good to take a look at both sides of the argument. So the bullish arguments, but also the bearish arguments to see if there is something I hadn't really thought about before. Because what I see a lot of people doing is when they own a stock, they don't even want to think about the counter arguments for that stock, because that might mean that they actually might have made a mistake in the past. So that's why in this video, I'm just going to give you a few possible bearish arguments for View for this company not succeeding in the future. And at the end of the video, I'm going to tell you what I am going to do with all that information. If I'm going to keep holding this stock, if I'm going to sell it, if I'm going to buy more, I'll tell you. But before we start talking about those bearish arguments, let's very briefly talk about the merger vote, which is going to happen next week on Friday, March 5th at 10 a.m. Eastern Standard Time. If you haven't voted, please at least make sure to try and do so, especially if you are in the United States and you haven't received your instructions from your broker. Just contact your broker to make sure you actually receive those instructions. If you're in the European Union, it might be a little bit more difficult to vote, or maybe in another country as well. But still, do contact your broker so that they know there is a high volume, a high demand for voting. And well, some of you might even be able to vote for free. In my case, for example, I'm having my shares at the Giro and I'm not being able to vote for free. So that's a big shame. But anyways, it is important to vote, of course. With Switchback Energy, we saw that the vote didn't go through 2 weeks ago because there were not enough votes, but luckily today they actually got the vote. Okay, so the important day here is February 23rd of 2021. That is the day on which you needed to have your shares, because if you didn't have shares on that day, then you're not going to be able to vote. Then if we take a look at the chart, we can see that the current stock price is very close to the bottom range, to the net asset value, as it's called, of $10 per share. Because usually before the merger happens, you can redeem your shares instead of, or in exchange for rather, $10 per share. That bottom is going to be gone after the merger has happened. So again, if the merger goes through, if everything is approved, the ticker symbol changes, you're not going to be able to redeem your shares anymore for $10 per share. But yeah, keep in mind that we do have that bottom right now of $10 per share, so the risk reward is actually quite high right now. The first bearish argument I want to make has to do a little bit with the cost of smart glass for the customers. So on page 19 of the investor presentation, we can see that 100,000 square foot of glass is going to cost you $6 million if you want to install View Smart Glass. Okay, so $6 million for the cost of smart glass. We can also see that the installation cost is 0.4 million, so that is $400,000. And we can see that the traditional glass costs you $1.2 million, of course. So that means if you simply compare smart glass to traditional glass, it's already 5 times as expensive just comparing smart glass to traditional glass. But you also need to take into account that, well, if we zoom out a little bit, let's see if we can do that. We can also see that if you're going to go for smart glass, you're going to be able to eliminate blinds and you're going to be able to downsize your HVAC as well. HVAC, for the people who are not familiar with that abbreviation, like many non-Americans, I suppose, is heating, ventilation, and air conditioning. So if you eliminate blinds, if you downsize your HVAC, you're going to be able to take off $2.1 million in expenses, more or less. So that means that, first of all, well, we said that the total cost of View is $6 million. The installation cost is $0.4 million, so that's $6.4 million in total. The cost of traditional glass is 1.2 million. So if you take 6.4 minus 1.2, that is going to give you $5.2 million in expenses in total. But then if you eliminate those blinds, if you downsize your HVAC, that is going to save you 2.1 million. And then the net investment is going to be a little bit more than $3 million. Very well. So 3 million is still almost 2.5x as expensive compared to the traditional glass, of course. But I'm also wondering, well, what if you want to go from traditional glass to smart glass? Because what does it cost exactly to, first of all, remove that traditional glass, to install the smart glass, because you would have already paid for traditional glass. Now you're also going to need to pay for smart glass. You already paid for blinds. Now you're going to be eliminating them as well. So you're going to be, paying for removing all that stuff. You're going to be paying for installing all the smart glass. So the entire operation is probably going to be very expensive. So in my opinion, I think especially the new offices are going to get smart glass instead of the existing offices, because I think in the case of existing offices, the cost of removing and installing is going to be quite high. So I might even think that that could lead to a decrease in the total addressable market that View actually takes into account. And I'm also wondering if the businesses are going to see the benefits of smart glass as well, because according to View, smart glass is going to lead to higher productivity, it's going to lead to happier and healthier employees as well. But I'm not sure if businesses are going to actually understand that investment, or if they're going to just be thinking about how much does it cost and how much money am I going to save with this exactly. With regards to residential applications, I'm also not entirely sure if that is going to work out very well. This year there was this year they're going to be taking that smart glass into residential applications as well, according to an interview with Roel Mulpuri, which is the CEO of View. And I think the same issues appear over here as well, because in traditional or in residential applications, you're often also going to need to remove traditional glass, remove blinds, and then install smart glass instead. So also here, I think that smart glass might even be only implemented in new apartment buildings instead of existing apartment buildings. And I also wonder here if individual customers, just like you and me, are going to see the benefits of smart glass and maybe just think of it as something that costs a lot and not think about it as an investment. The second point I'd like to make has to do with the cost of sales for View. As we can see in the investor presentation, in September year to date, they had $24.5 million in revenue, but the cost of sales was rather high at almost $92 million as well. The R&D, so research and development, was a little bit more than $50 million. The general and administrative costs were almost $63 million. So the total costs and expenses were $205 million with a revenue of a little bit more than $25 million. So that could be actually a very big pain point. Now View says, yeah, sure, but our gross margins are going to go up in the future. For now, these gross margins are quite horrible if you just look at the revenue and the cost of sales, of course. But they do say that in 2025, their gross profit margin is going to go to 59%, which of course is quite great. Why do they think so? Well, they think that's because of the economies of scale. They're going to be able to automate a lot of their processes, and they're also going to be able to standardize their products as well, which is going to lead to lower costs, and they're going to be able to produce more and more as well. We can also see that they expect, and of course, as I say in many of my videos, expect is a very big word, that they're going to have some profits, positive gross profit, in 2022. And with regards to EBITDA, we can see that they are going to have a positive EBITDA in 2023 as well. Now, this of course all sounds great, but I wonder if they're going to be able to execute on this. I think View still has a lot to prove in this sector. The next point I want to make has to do with revenue growth. And here in the investor presentation, we can see that they expect, and again, expect is a big word, they expect to go from 31 million in 2020 to almost 1.9 billion in 2025. And this is what happens with a lot of SPACs. Many SPACs say, yeah, sure, we don't really have any revenue for the next coming years, but in 2025 or whatever year is, we're going to have like billions in dollars of revenue. Don't worry about that. But what I want to see is execution. I like the story, but I want to see the team, the company View execute on this mission. View does say that they do have a large backlog, a large design backlog of 560 million, but I do just want to see that in the papers, in the books. I want to see that in the SEC filings, the quarterly earnings, etc., that they actually got that revenue as well. Another counter argument that View gives is that they have been preparing basically for almost 10 years now. They have been going from a generation 1 to a generation 4 product, and they say that they are now ready for mainstream as well. So that could mean that they right now could scale up more and more to actually get through their revenue of $1.9 billion in 2025. And View also says that there are multiple tailwinds in this industry as well. They say, for example, that there is more demand for net zero buildings, that people want to conform to the ESG goals, for example, that the Biden presidency can also have an impact on this because Biden is going to focus on a green economy. So those are effectively tailwinds for this company View. But I'm just going to ask the same question as I did before. Can View actually execute on this mission? The plan sounds great, the ideas sound great, the reasoning sounds great, but again, I want to see execution. The last point I'd like to make has to do with the incentive-based compensation plan for the management and the CEO. With regards to the management, we can see that they are allowed to get 12.5 million shares. That happens when the price of the stock reaches $15, then they're going to get half of that, so 6.25 million shares. And when the price reaches $20, they're going to get another half, so again, another 6.25 million shares. Regarding the CEO, he is going to get 2.5 million shares for each 100% increase in the share price above $10 per share. And that has a maximum of 25 million shares over a period of 10 years. So if I understand that correctly, and correct me if I'm wrong, let me know in the comments if I'm actually wrong, this is more or less the payout schedule for Raoul Mulpuri, the CEO of View. He's going to get 2.5 million shares at a price of $20, then $30, $40, etc., 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 all the way down to $110 per share. So if the stock price would reach actually a dollar amount of $110 per share in the next 10 years, he is going to get in total an amount of $1.6 billion. Now, I do understand that these are, of course, incentives, and that means that the interests of the investors, the management, and the CEO are aligned because everyone wants the price to go up, especially until $20 per share, because that is when the management is going to get all their shares as well. But I do wonder if the CEO actually needs this many shares in total. So what am I going to do with this stock right now? Well, first of all, we have seen that smart glass costs a lot, not just for customers, but also for View itself. The revenue is low, but the cost is high. So we're going to see if they are actually going to be able to go to those economies of scale and if that gross margin is actually going to go up in the future. Apart from that, View also thinks they are going to have very high growth over the next 5 years, but they also will need to prove that to us. And the compensation plan for the management and the CEO could of course be a nice incentive, but I'm wondering if it's a little bit too much. Okay, so what am I going to do? Well, for now, I'm just going to continue holding this stock, and I might even add a little bit more to my position, because I do think many interests are aligned right now, especially if we reach that $20 per share range. And I also like the product, I like the CEO, I like the story behind it, but I do think that they need to prove that they can actually execute on their plans. But if they do, if they can actually prove that to us, that they can execute on their plans, I think View can be an amazing company in the future. So I'd like to know from you as well what you are going to do with this stock, with this company. Are you going to hold? Are you going to buy more? Are you going to sell your shares? Let me know in the comments what your opinion about this company is right now. So I'm going to leave you with a quote from Chamath Palihapitiya, which might be the king of SPACs. SPACs may be easy to raise, but they are hard to execute, and success is not guaranteed. Good luck to all the players.